Hi, this is Tim Bryan with Bryan's Business Umbrella, a national virtual business advisory firm helping our clients find valuable strategic solutions for their unique needs via back office platforms, including accounting, payroll, controllership, tax planning, tax preparation, and bookkeeping, as well as various other value-added menu options such as strategic pricing. In today's episode for podcast, no value added, and of course we think that is not correct, business advisory. Episode 6, we're going to talk about sunk costs. This is different than episode 5, which was opportunity costs. It is another accounting feature or issue that is not seen on the balance sheet or income statement, but is very important, and it's a mistake that everyone makes. Basically, a sunk cost is a cost that a business makes or has incurred, that no longer can be recovered. So it's tangible money that's been invested into a project. Sunk costs should not be considered when making a decision to continue investing. In the fact that in an ongoing project, since it's no longer material, you cannot get that money back. So if a project is, for example, is tanking, and you know it's not going to work out, and that's it, but you've spent X amount of dollars on it, the human nature aspect is to, try to keep pumping money into it in order, because we've already spent this much money in order to make it work. So it's a little bit counterintuitive. The problem comes, again, when business owners continue investing in a project that is not working due to the size of the investment that's already been, the size of the money, that's already been invested in the project. So the prior amount or the sunk cost should have no bearing whatsoever on the decision whether to go forward or not, because you don't want to, the street term is throwing good money after bad. So you've already spent money, the bad money, the project's not going to work, so there's no reason to throw any more money into this project. So that's the whole basis of sunk costs. It's a mistake made in business decisions, personal decisions. If the project's no good and it shows it, then the project's no good and you don't do it. So again, the basic phrase you might hear is, I have to make it work. I've invested this much already. Stuff like that. So unlike opportunity costs, which was the topic of episode number 5, opportunity costs should be taken into account when making a business decision so that you can pick the better option. A sunk cost is bad and is no longer relevant, so the sunk cost should be taken out of the decision-making equation. Again, if it's no good, it's no good. You have the study to prove it. You've spent your money. It's not going to work. Move on and spend your money in the future wisely on another project. And again, it's a fallacy. It's a mistaken reasoning that considers the sunk cost of an activity when deciding to continue with the actual activity, when that should be, again, you take it out and facts are facts and you go forward. It's a great accounting lesson, business making lesson. Everyone can learn from this one. And I'll give a business example and a personal example. In business, if you get a marketing project for $50,000 and it's just not getting you the leads that you were expecting, or any real sales that you're expecting, and you said, well, I've spent this much money on it already, So you just keep going with it in order to try and have it turn around and get the money that you're spending back on it. Well, it's just not going to happen because you've already proven that it's not going to. So as I said before, the street name, you're just throwing good money after bad money. And it's a bad proposition for you and your business. And it's frustrating, actually. There's no need for all that stress. You tried something, it didn't work, fine. Move on to the next project. And people do this all the time in their personal lives. An example, there's a bad company concert last week. We spent X amount of dollars on it. My wife wasn't feeling good. So she's under the, all stressed out. We have to go. We spent all this money on the concert. And I said, no, the money's gone. Whether we go or not, we're not going to get the money back. And if we go, we're not going to enjoy the concert because you don't feel good. So make the decision based on that. Do you want to go or do you not want to go? So we didn't go. And it was the right decision because she was not feeling well all night, and we would have been miserable at an outdoor concert when the weather wasn't all that great. So that's always a huge one, is like concerts, because you have to buy the tickets way in advance. And if something happens or is going on or unexpected the day of the concert, people mistakenly take the cost of the concert into account for their decision that night. And that is the entire concept right there in a nutshell of a sunk cost. The money's gone. Make your decision based on what's happening now and for in the future in the case of a business. So that is episode 6 of my podcast, No Value Added Business Advisory, the sunk cost, the opportunity cost in episode 5, accounting and business principles that you do not find on a balance sheet or an income statement. Huge considerations, though, when trying to make a good, profitable decision or cut your losses for your business. Very important stuff. And with that, I will end this episode. Lead with love. Have a great day.